As I mentioned yesterday, the Federal Reserve announced it would be raising rates for the first time since 2018. That 25 basis point or quarter point increase coming, and the Fed says 6 more are to come this year as it works to combat inflation. That means the rates level would finish the year at about 1.9% and then a target of 2.8% by the end of 2023. That's according to the so-called dot plot. And at the same time, Powell also said that the Fed could finalize plans to shrink its $9 trillion balance sheet at the next meeting. That meeting, by the way, is May 3rd and 4th. So some important moves here. And Chair Powell also making very clear that the Fed is prioritizing the inflation fight over the continued promotion of growth. He talked a lot about inflation, how it is hitting the middle class, and even those elements, of course, that the Fed does not include in its core readings, things like gasoline and food and transportation. He talked about that in the press conference yesterday, Brian Sozzi.
Right, Julie, and it is just fascinating to see this market response. I know stocks are under a little pressure here in the pre-market, but let's keep in mind we saw a rip-roaring rally yesterday that accelerated into Wednesday's close off of the statement. I think this comment from Evercore ISI strategist Krishna Guha really summarizes that market sentiment coming off of Fed Day. He says, quote, importantly, the policy response was moderate relative to a big shift in the Fed's inflation outlook, leaving the real rate trajectory still unthreatening. That in combination with an upbeat take on growth raised hopes of a soft landing and is near-term risk-friendly. So seeing a little pullback here in the pre-market, but still, you read note after note. You talk to strategist after strategist over the past few hours, and they are breathing that collective sigh of relief. So far, so good. But again, we'll see how things go shape up over the weekend as traders have more time to digest this news.
Yeah, I mean, the Fed telegraphed this. The market's been waiting for this in terms of that first rate increase. It's just now the question of how's the rest of it going to go? We're going to talk more about that in just a moment. But